Hello, hello, good morning. Good morning, good morning. I'm going to give you a moment to get on. And if you're watching this recording, feel free to skip ahead, probably about a minute or two to get to the content. And if you're watching this on YouTube, thank you very much. Make sure you subscribe so you don't miss anything. Okay, now I know that my technology is working. Let me share this out in a few places, and then we will get going as soon as I get to the right spot. How about that? All right. Here we are. I'm going to have to fix something there. All right. We share this in a few places. Good morning, Lorvelle. How are you? Thank you for tuning in. Hello, Ray. Hello. Good morning. Good morning. Okay. All right. Now I got this shared out in a few places. So first of all, I want to welcome you to the show. My name is Lysandra Everett. I am the Home Biz Tax Lady. I help home business owners win the tax game by keeping more of the money you make and paying less to Uncle Sam. Okay, today I'm going to be talking more about S corporations based on the live I did yesterday, which addressed independent contractors, whether or not they should incorporate or something. I talked a little bit about S corporations, and so that generated a lot of questions in my inbox. So I am going to talk about the pros and cons of an S corporation and the stuff that you need to know. Okay. That's basically what this is, the need to know stuff about S corporations. So what is an S corporation? Well, an S corporation is it's a corporation, right? Like duh. But it's a subset of the C corporation. An S corporation is really for the self-employed person. Why would a self-employed person form an S corporation? Well, there's the benefit of no double taxation. So for instance, a C corporation has to pay taxes at the corporate level, but the shareholders also have to pay taxes on the dividends when they are distributed, okay? So that is the first benefit, no double taxation. The second is saving on self-employment taxes, okay? Now, if you have an S corporation, you have to be, you the owner, are an employee. Okay, so that means that you have to pay yourself a salary, and but the profits that are left over are then distributed, but there's no self-employment tax on the profits. Okay, after you pay your salary and expenses and all that, whatever is left over is profit. Once that's distributed, you don't have to pay self-employment tax on that money. Okay, so that is the other benefit of the S corporation. And that's why people do it. It really just depends on your income level. Like people ask me, should I form an S Corp right now? Well, it really just depends on the income level and if it's going to be of benefit to you. Okay. So that is, so like I said, when it comes to business structure, there is no cut and dry answer for everyone. Okay. It's got to be a big picture thing. Okay. So now let's talk about the requirements. A few of the requirements of the S corporation, and let's put it into some real world type situations, okay? So first, you can have no more than 100 shareholders. Now you're thinking, okay, I'm self-employed. I'm going to have just one shareholder anyway. Okay, great. But if you decide that you needed an infusion of cash for some reason, and you decide to sell your stock, an S corporation can only have one class of stock, okay? So if you decide to sell shares of your corporation to get an infusion of cash, you can only have 100 shareholders. Husbands and wives count as one shareholder, okay? Then there are certain allowable shareholders. Let me tell you who it can't be. You can't have a corporation that's a shareholder for an S corporation. You can't have a partnership that holds shares in an S corporation. And non-resident alien shareholders, mean foreigners cannot purchase stock in your S corporation. Okay. And then insurance companies, some certain financial institutions, on a regular day, you ain't got to worry about that. Okay. So let's talk about the whole shareholder thing. Okay. So you have to be a U.S. citizen to have stock in an S corporation. Okay. So let's talk about how this looks. So we got Lorvell on here, right? I'm going to pick on Lorvell because he's always here and I certainly appreciate you. So Lorvell decides to go on vacay, right? He goes to Brazil, meets this fly honey dip, right? He's got his S corporation back home going on. He goes to Brazil, meets this lady. They hit it off. He goes to see her. She comes to see him and he pops the question and they get married. From the moment you get married to that Brazilian beauty, you have now invalidated your S corporation and you're going to have to change to a C corporation because she is not an American citizen. Okay. Until she becomes an American citizen, you can't have an S corporation. You have to then move to a C corporation in order for your business to be valid. Okay. So most people, don't think about that on the marriage end. It's because the husband and wife are considered one shareholder. If one person is not a U.S. citizen, you can't have your S corporation. Okay. So that's something to think about when you think about your business. All right. Okay. Then let's talk about the whole salary part. Okay. So you are, depending on what your profession is, let's say you are, you own an employment agency, right? Okay. So if you are the manager of your employment agency, then you have to look at what is the reasonable salary, both nationally and locally for a manager for an employment agency. What is that salary? All right. Now you have to pay yourself a reasonable salary, which means that every month you've got to pay yourself, whether it's bi-weekly, monthly, however you do it, right? But you also have to pay employment tax by the 15th of every month. You also have to issue yourself a W-2. Okay, so now let's look at, again, a real world type scenario. So let's just say that a reasonable salary for your business is $70,000 a year. Okay. And then let's say your business brings in $100,000 overall. And, at the end of the day, once you distribute your salary and then you pay your expenses and you have nothing left over, you've basically zeroed out. Well, you really haven't gained anything by having an S corporation because you don't have any dividends to distribute. Okay. But let's just say that after you've deducted your salary, your expenses and everything, that you have $30,000 left over. Well, that $30,000 then gets distributed to you as income. And then you pay taxes on that income and you get to avoid the self-employment tax. Okay. Self-employment tax, I do believe, is a flat 15.3%. I do believe that's what it is. So don't quote me on that because I got a lot of numbers running around in my head right now, but I do believe that's what it is. Okay. So when you get that income distributed, it's taxed at whatever income level that you're at. Okay. That's what it is. What else? The no more than 100 shareholders. Oh, filing deadlines. Okay. The filing deadline for an S corporation is March 15th, which means that you got to have your junk done before your shareholders can file their taxes, because the K1 that when you're distributing those dividends, then with the shareholders, they need that in order to file their taxes. So you got to get done by March 15th. And can you request an extension? Absolutely. But your shareholders are also going to need to request an extension if you're expecting to distribute dividends, because they got to include that income in their tax returns. Okay. So, so as an S corporation, you got to be on your joint. Okay. This is why when you're moving to that S corporation level, when you decide to do that, it is probably best to outsource this, because it's, it can be time consuming. As a business owner, your focus needs to be on building the business. You need to be bringing the money in, not worrying about the tax end. Okay. That's why you probably need to outsource this. There are, every state has different fees for an S corporation. So you have to look at your state. I forgot what this website called, but you can go find it for your state to see what their fees are for, annual fees for S corporations are. Every state is different. Okay. What else? I think that's the nuts and bolts that you need to know about an S corporation. The thing about it is that, again, there's no simple answer for everyone. It's a big picture deal as to what type of business structure is going to be best for you. Okay. There are also certain professions that qualify for a personal services corporation that's taxed completely differently. I might do a live broadcast on those. But for the S corporation, that's what you need to know. The main thing is that, and I think that people miss is the reasonable salary and having to pay those employment taxes, because you got to do that. As a matter of fact, I read an article yesterday where the IRS has really been lagging behind on penalties for late filing employment taxes, but with some increased automation, that's about to end. Okay. So if you have an S corporation, even if you have employees, or if you are the only employee, now is the time to get yourself right before the IRS catches up with you. Okay. And so if you need to book a consult, I'll type that in the comments as soon as I'm done with this, because y'all know I can't type and talk at the same time. It just does not work out well. But yeah, so if you have any more questions about the S corporation or something specific to your needs, then, definitely book a consult with me and we can definitely talk about those things. Otherwise, that's it for me, guys. That is S corporations in about 15 minutes. All right. So thanks so much for all of those who tuned in and shared this out. I certainly do appreciate you. You guys have a fantastic day, and I'll see you next time. Bye.